What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on MMTLP and FINRA saga.
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up.
And in today's video I will show you the latest news directly related to our story. I will show you another evidence of illegal actions that is happening right now around the MMTLP story. I will show you the mess that potentially hide the solution of 2 days of trading. Potentially it hides this solution. And on top of that, I will show you an update from Richard Hoffman and the new deadline that might help us to solve this problem on a congressional level. So, and before we dive deep into all of this, I want to ask you only one thing. I want to make an exchange of 4 hours of my hard work to prepare these videos. I want to exchange it on just 1 second of your work, and I want to ask you just to hit the like button in exchange of my work. And the most powerful of you definitely can leave a comment in the comment section for whatever reasons you want. So let's start with the news itself. On MMTLPresources.com you can find this news that was published just several hours ago, and it's titled "User being charged short borrowing fee for MMTLP." And let me quote you this news in details. 9 months after MMTLP has been deleted, a user is being charged a short borrowing fee because it's hard to borrow. User Phil Alderson shared a screenshot with no explanation today, but it appears to show that his account will be charged for security 629999590, one of the MMTLP QSIPs, because his short position is hard to borrow. And here's this tweet, and let me quote you further. The stock borrow rate is not listed. We assume that this person had at least 1 share short of MMTLP, which we'll forgive him for, since it gives us insight into this strange situation. And let me show you this tweet in details. As you can see, it is a screenshot from Schwab, and it says, "You are now being charged a stock borrow fee to maintain a short position. Your short position in the securities shown below has been classified as hard to borrow. As a result, we began charging a daily stock borrow fee to maintain the position as of September 15, 2023. The fee can be calculated by multiplying short market value, the price of the shares at market close, multiplied by the number of shares, by the stock borrow rate found below for each hard to borrow security. This number is then divided by 360. Though stock borrow fees change daily, rates are expressed on an annualized basis. And I have to say that we don't have any additional information regarding his position. And let me show you this tweet. Patrick Dehcordy wrote, "A software engineer changes a line of code for maintenance. The whole community loses its mind." And Phil responded, "I think you're probably right. Notice came, but interest never started." And I have to say that yes, Patrick might be right, and the main point of this situation is not that he will be charged for his short position, and not the fact of this letter itself, but the fact that one of our community members holds the short position, and we have proven information regarding this. And previously we had only indirect information that we have potentially shorts that was transferred from MMTLP to Next Bridge Hydrocarbons. And for now we have this update from Schwab, and we have a direct information regarding this issue. And definitely it might help us to fight against this illegal activity in court. So let me show you further information, and let me show you the mess regarding the 2 days of trading. Huckleberry wrote this tweet 16 hours ago, and in my opinion it is very interesting and important. Basically he found out where we might find our 2 days of trading. So unless every MMTLP shareholder is vetted for unsolicited quotations, this is where they hang up in 2 days of trading lies. See FINRA 6432 and SEC 15C211. If you get past the fact that there is no longer a QSIP, but instead several contra QSIPs spread out amongst brokers, the issue is the mechanics, the current rules and the unknown versus known factor. MMTLP was traded due to an exemption, even though it was a total farce and the paperwork was never filed, but that's a different matter. If a security trades on OTC using an exemption and trading is suspended for any reason, it cannot trade or have quotations again without going through a formal registration process or with FINRA Form 211. If the security is registered, there is nothing to stop trading except a suspension by the SEC or another halt by FINRA. But per planet, suspension or halts aren't the thing. Halts and suspensions are reactive, not proactive, and this is important part. Even though the idea is simple, there is no process for listing a security without registration with intentions to halt 2 days later. This is where it's possible, but needs to be outlined and ordered by the SEC. FINRA can't because it's against their standing rules. Exemption to 15C211 would need to be made also, and in a way that I can't be used as precedent on other tickers, only MMTLP. Lastly, even though we all suspected counterfeiting and rehypothecation, which would have resulted in a major buyback event those last couple days, nobody was 100% certain. Even I was 50-50 at best. Meaning, in market order competition, it was still compelled to sell at whatever price target I felt was max value. But if 100% certain, that actually would have meant any price would have been considered, even the astronomical ones. If we go into this, how do they set a price ceiling? Because without that, any price would have to be met. This would quite literally break the capital and global markets. Sure, we would all be filthy rich, but all this civilization would suffer around us. I want to win, but I don't want innocent people to get hurt in the process. I don't even mind if there is a market correction due to this, but a full-fledged crash, Great Depression level event. Nobody wants that. So, yes, it is a total mess with these exemptions and with these two rules, FINRA 6432 and SEC 15C211. And why it is basically happening? I have to say that the mess started with JTS Securities and Conaccord, and you know that these two companies back in the days was involved in the process of beginning of trading MMTLP shares. And let me show you this tweet that was written by RareDD on September 19th. He wrote, Bart agrees that FINRA and the SEC may potentially be protecting GTS securities because their failure threatens confidence in US Treasury securities. What do you think? And he reposted his own tweet that he wrote on August 19th. The true danger of GTS securities going bankrupt from naked short selling MMTLP is that they also deal with US Treasury securities, clearance, settlement and custody. Look at this February 2023 meeting, the participants and the subject matter. And he added several screenshots regarding the relationships in between GTS securities and its position on US Treasury securities. And this might also be a huge danger for the market in general. And we know that potentially major banks are covering the back of GTS securities. And one of these banks is definitely Goldman Sachs. And let me quote you this. RareDD published this 17 hours ago. He wrote, Goldman Sachs appears to be a habitual naked short seller. They do clearing for GTS and many high-ranking regulators come from GS. And he refers to his own tweet that he published on April the 8th. And he wrote, 2010, 2012, 2016, 2019 and 2023. Some of the years Goldman Sachs was in the news for counterfeit shares, naked short selling. The 2019 article notes it was the third case in Korea. We supposed to believe these were all coding errors. And he added several screenshots of these articles. And I also covered this back in the days. And I've told you that the problem is really huge. On top of that, not only Goldman Sachs is involved in this process. Syntax Queen of the Metaverse wrote this: "Pay attention, folks, JP Morgan is not okay. I have said it before and I will say it now. Be mindful of where you invest your money. I personally love Navy Federal and USAA. There are some great non-military credit unions out there as well. Just get informed. I personally have concerns with Big Four: Citi, JP Morgan, Wells Fargo and Bank of America. Please look at their relationships with hedge funds and swaps. Thank you, McKinsey the Cow." And she refers to this tweet that was written by McKinsey the Cow 15 hours ago, where this person stated that JP Morgan sold more than $605 billion of credit protection in the derivatives market in the 6-month period ending June 30th, 2023. This means they covered some of their position in order to stay quite on a safer territory. And this might also show that they were involved, and basically they are involved in this process of this illegal activity. So, and what should we expect next? I have to say that we have another deadline, and let me quote this tweet that was written by Jung Savvy. She wrote: "MMTLP community initiatives from September the 20th. Gary Gensler and SEC appears before the Financial Committee on September 27th. Please call your representative and request." Plus, they call Patrick McHenry's office Financial Committee and request a subpoena for an audited aggregated share count for MMTLP. Plus, they request the Financial Committee question Gary Gensler and SEC regarding MMTLP fiasco. Plus, they write a letter of support for answers and reconciliation for the 65,000 victims of the MMTLP fiasco. Send your representatives emails from fairmarketsnow.org. Customize with your personal story and request the above items as well. Post and repost the links below. If you need an assistance with setting up a call with your representative or staffers, please reach out to these persons. So, I have to say that, in my opinion, this might also be very important meeting where Gary Gensler will have to answer the tricky question regarding MMTLP, and if he fails to do it, definitely I think the subpoena will be the next step from Congress. So we have huge news on this video, and on top of that, let me show you another one. We know that Richard Hoffman is in the process of arbitration with Fidelity, and he consistently covers his updates regarding this situation, and he wrote this just 2 days ago. Abigail Johnson, head of Fidelity and the Johnson clan, is worth a purported $34+ billion and doesn't give a rip about the retail traders, in my opinion. Shame on you, Johnson clan. And he also added this. And yes, by the way, in light of contacts with your office, she is a deponent I am seeking in my motion for special discovery in my MMTLP arbitration. So this means we might see some details from head of Fidelity, not only from Gary Gensler and potentially Robert Cook, the heads of SEC and FINRA respectively, but also from one of the major broker-dealers and from the head of this broker-dealer. And guys, I think it's huge, and potentially, as you can see, the activity in our case is ramping up, and we are fighting together. And to win this battle, we still have to unite, and to unite, please hit the like button, subscribe to my channel, and share this video with your friends and family. So, see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed. Born a rock star in this life, gone live it up.